Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's see how the global markets did manage to pan out in trade. The US markets ended positively. The Nasdaq was up almost close to 1%. The S&P and Dow Jones also ended on a positive bias. The European markets no doubt ended slightly flat to slightly weaker, but Asia at this point of time is trading rather mixed in trade. The SGX Nifty is indicating a positive outlook. It's up almost 38 points, indicating that we might come in close to record highs as far as the Nifty is concerned in trade today. Now, if you're looking at how the ADRs panned out in trade, most of the ADRs did well. Vedanta was up almost 2.5%. Tata Motors was up 2% in trade. So there was a positive traction that was happening on the market. ICICI Bank was the only one that traded weak, which was down 0.4%. Now, if you're looking at how the Nifty panned out in trade, the Nifty was absolutely flat, but the mid cap and small cap index did manage to move up significantly in trade. The index that did extremely well was, if you're looking at firstly, the PSU banking index continues to outperform. Some of the larger private sector banks are not contributing. That is why there is underperformance on the Nifty bank, at least in the near term. Metal index was up almost 1%. Real estate continues to be weak. It was trading down by almost 1.4% in trade. Now, if you're looking at which are the counters that managed to move, the indices which have gained significantly this month include Reliance. Because of Reliance, Nifty Energy is up 8%. PSU Bank and the IT index have gained this month. What hasn't gained this month is the high beta. You have your real estate, metal and media index, which were down anywhere between 3 to 6% in trade. This week, 3 days have gone by. How have they panned out? Metal index is up 6%. PSU banking index is up 5%, and the small cap index is up almost 4% this week. What hasn't done well is the energy and IT, which on this month have been outperforming. Now, if you're looking at the fund companies which are trading at record highs, most of them continue to be there. IT stocks continue to be there, and a lot of consumption-based stock continue to be there. The number of stocks on the 52-week low is decreasing, but nevertheless, counters like Symphony and South Indian Bank disappointed with numbers. They are there, and Indigo, because of their operational issues, is down in trade. Now, how did the fund flow pan out? After days of buying, FIs finally sold in. They sold in 1,200 crores in the market. DIs were net buyers to the tune of almost 97 crores in the market. Contribution, even Stevens, HDFC Twins and SBI contributed. Axis Bank, NTPC, TCS, they managed to fall in trade. Now, let's take a look at the F&O. One of our viewers was asking how they see expiry panning out in trade. This is how expiries. Rollovers have been slightly on the weaker side. Rollovers have been to the tune of 50%. So on the Nifty, it was rather flat in trade. The Nifty Bank, let's see how the rollovers have panned out. That's also at almost 50%. The rollover into the August series has been almost 68% at this point of time. Where are positions taken? As far as this expiry is concerned, it seems unlikely that 11,000 will be broken. It seems even unlikely that the 11,100 will be broken in trade today. 11,200 is where there is a lot of resistance, but if the market manages to cross the all-time high and we may see traction, we might close in about the 11,200 mark, but it will be between the 11,100 and 11,200 mark. That's where the expiry pretty much can come in. Now, as far as what open interest build-up we're seeing, what happened is, let's talk about the stock in the F&O band. Adani Enterprises comes back into the F&O band. It was up almost 7% in trade yesterday. Few stocks, the Nifty PCR remained unchanged. It was at 1.89. The Nifty Bank PCR moved up to levels of 1.11. 4 stocks that I want to point out in trade. First of all, Tata Elxsi was up 6%. We can't look at the open interest decline because it's rollover, but nevertheless, there was traction happening. It was up almost 6% in trade. Kajaria managed to move up on high volumes. The counter was up almost 3% in trade. The 2 other counters I want to point out, Jubilant Foodwork managed to move down post the numbers despite strong numbers, because now there are concerns whether this growth rate will continue for the counter. And the last stock that I want to talk about is Reliance Capital, managed to move up almost 1.4%. Momentum seriously seems to be there with this counter. So that's what we're watching on the domestic side. But on the international side, Paul Allen from Bloomberg has all the top international headlines.
Canada is again slamming potential auto tariffs and the idea that cars made with US parts pose a threat to American national security. President Trump has already used the national security argument to put taxes on imported steel and aluminium. This has triggered angry responses from both US allies and opponents. Canadian Foreign Minister Chrystia Freeland spoke after trade talks with her counterparts in Mexico City.
Hold on, we definitely have to move.
The very notion that Canadian cars and car parts could pose a national security threat to the United States is frankly absurd.
GM and Fiat Chrysler both fell on disappointing earnings and growing concern that tariffs are wreaking havoc on the auto industry. Both cut profit forecasts for the year, with GM blaming higher commodity costs, including aluminium and steel. Ford tumbled in late trading after cutting full-year earnings forecasts and a warning of an $11 billion restructuring that could take 5 years. The British government is said to be weighing a radical option to break the deadlock over Brexit, but it might enrage the Northern Irish Party propping up Theresa May's administration. We're told officials may allow the EU to impose its market regulations on the province when the rest of the UK breaks away next March. The plan is seen as a backstop but would avoid a hard border with Ireland. Former cricket superstar Imran Khan appears on course for election victory in Pakistan, although his opponents are already crying foul. Exit polls suggest his Movement for Justice party is ahead of the Pakistan Muslim League of jailed former Premier Nawaz Sharif. Projections show Khan winning the most seats, but falling short of the majority needed to form a government without a coalition. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Let's shift focus to currency market. Talking about Indian rupee, it snapped its two-day winning streak yesterday and ended by rebounded by a good 16 paise to end at a fresh one-week high of 68.79 levels against the dollar. Now remember, the home currency has depreciated by 10 paise in last two trading sessions. Now this move comes after local equity markets gained for the fourth straight session yesterday, and also some dollar weakness overseas largely helped the Indian rupee to gain yesterday. Well, speaking of the bond market, sovereign bonds ended steady as yield on the 10-year benchmark security ended flat at 7.79%. On the global front, we have seen some weakness in dollar, and it now trades lower for the third straight session, slightly above the 94 mark. That apart, both euro and pound gained over 0.4% yesterday versus the greenback. And in terms of data and key policy meet, we will be watching out for European Central Bank policy, which is scheduled for today. It is expected to maintain a status quo in its policy meet. And lastly, speaking of dollar rupee, now it is trading at 68.70 levels against the dollar in the non-deliverable forward markets, which indicates a flat to positive opening for Indian rupee in today's trade.
Well, lots of companies to track on the back of results that were reported after market hours. Starting off with Ambuja Cements, which reported a good set of numbers, revenue growth of 6%, net profit growth of 27%. On the other hand, as far as the EBITDA performance is concerned, you did see margins come off a bit, but strong bottom line performance like we had seen in case of ACC. Next on the list is Canara Bank. Again, good set of numbers coming in. Net interest income growth of 43%. Net profit came in at 281 crores as compared to an expectation of a small loss. And again, this small profit number, is against a loss of 4,800 crores that we had seen in the March ended quarter. So a very big improvement even sequentially. That was largely on account of recoveries that we've seen in two steel accounts, Bhushan Steel and Electro Steel Steels. Gross NPA also improved. It declined sequentially to 11.05%. So expect this one to do well in trade today. IFB Agro was another one which did well. Revenue growth of 24%, net profit growth of a much higher 61%. Operationally also it was a good quarter with EBITDA margins expanding by about 90 basis points. Fourth on the list that we have is ADF Foods, where revenues grew by a muted 4.7%, but the net profit growth came in at 22%. Operationally, EBITDA, however, more than doubled to 8.5 crores, and we saw a sharp expansion as far as the EBITDA margins are concerned. Next, you have Syngene International, revenue growth of 39%, very strong top-line growth performance. Net profit growth restricted to 6.5%. Even as far as the EBITDA performance is concerned, it grew by about 23%. And finally, you have Sanofi India, where revenues grew by 15% and the net profit by a very strong 35%. The positive surprise here was really as far as the margins are concerned, which rose to 18.8% as compared to 12.7% in the same quarter last year. However, there was disappointment as far as IRB Infra was concerned. Revenues dipped by 15%, even as net profit, was managed to retain more or less around those 240, 250 levels. As far as the EBITDA performance is concerned, that also declined by 8.7%. So slightly disappointment as far as IRB Infra is concerned. But those are the list of stocks that you need to track and trade today.
Okay, L&T came out with numbers yesterday in line to slightly better set of numbers. The revenues were much higher. The profit came in slightly lower. The EBITDA margin was much higher. So EBITDA margin coming in at almost 10.3% versus our estimate of almost 9.5%. So strong set of numbers there. Obviously, there are some adjustments there. The EBITDA was aided by sale of assets as far as the Kattupalli port was concerned. But at the same time, they took in some provisions because of the real estate business. So net the EBITDA margin is much better than what the street was anticipating. They managed to maintain the guidance, order inflow guidance, the revenue guidance. What they've said is that, this time around order inflow will be front ended because the fact that, there are a lot of elections and a lot of political events that are coming in. So they expect orders to be front ended this time around, unlike what they saw in the other years. As far as order book is concerned, decent order books, almost 2.7 lakh crore is the order book. The bagged orders were 36,000 crores in this quarter itself. Basically, orders coming in the infra, hydrocarbon and heavy engineering segment. What L&T is saying, first of all, they're saying that the tendering activity is rather strong in the domestic market, but they're saying that opportunities are improving in the international market. What they're also saying is that the private sector is still on a wait and watch mode and orders are coming in from the public sectors, and the large order book that they have is a big hedge that they have against the cyclicality of the market. So overall, expect the counter to react positively to strong set of numbers that came in. But Somit, what about Infratel? What happened there?
So it was the higher interest income that aided Infratel's bottom line in the first quarter of financial year 2018. Now, if you see the headline numbers, revenue was literally flat at close to 3,674 crore rupees, aided by higher rental income, while EBITDA declined by around 5% on the back of lower energy spreads. Now, EBITDA margin of the company came in lower at around 41.4%, while the net profit was higher by around 5% to close to 638 crore rupees. Now, tenancy ratio, that is the number of antennas on one tower, stood at close to 2.22 times versus 2.3 times reported by the company in the last quarter. Now, this is the lowest tenancy ratio reported by the company in the last 7 quarters. On the operational side, the financials were impacted because of lower energy spreads. Energy spreads stood at around 3.7% because of the seasonality impact, and it was also the lowest energy spread reported by the company in the last 8 quarters. But it was the interest income that aided the bottom line for Bharti Infratel. The company reported an interest income of close to 29 crore rupees versus an interest expense of close to 13 crore rupees in the last quarter. Now, like the last 2 quarters, in this quarter also the company lost close to 4,800 tenants on a net basis because of consolidation in the telecom service provider space. Now, this is the 3rd consecutive quarter where the company has lost tenants, and on an absolute basis the company has lost close to 19,300 tenants, but of them 6,672 tenants continue to pay in the first quarter of financial year 2019. Lastly, the key updates to watch out for in this conference call that will be scheduled today will be management commentary on further tenancy losses and the further tenancy growth that the management is looking out for, and along with this, any updates on Indus merger would be a keen thing to watch out for. Shifting focus from numbers that were reported to numbers that will be reported today, and ITC is the first Nifty company that will be reporting, and we have Agam to give us details on the same.
Thanks, Somit. Well, we are expecting a steady quarter for ITC moving in. Let's talk about the top line. We're expecting about a near 11% growth on a year-on-year basis. Margins expected to remain flat around 37.2% largely. Consequently, we could see profits rise as much as just 9.4% year-on-year. What's going to stand out in this particular quarter and what everyone is keeping an eye on is 2 things. The first one is cigarettes volumes growth, and even though the company does not report the cigarette volumes, there are estimates and expectations of it being flat to a decline of around 2.5%. That said, we're also keeping an eye on the FMCG excluding cigarettes business, and that's where we're seeing a real strength come through because of the company's investments in this particular segment over the previous few years, and we're expecting 15% growth on a year-on-year basis here. We're likely to see an uptick in the hotels business as well, expecting to see about 10% growth there. But on the other hand, agri and paper business are likely to remain subdued. What are we watching out for going ahead? Well, of course, the impact of GST and cess and the kind of expectations, the anticipation we can have on taxation when it comes to cigarettes, that will be a key mover for ITC. And the other one, of course, is the FMCG business. We're likely to see an uptick from here on when it comes to the agri business, especially given we've seen a good monsoon coming in. But on the whole, we're expecting a steady quarter for ITC with a double-digit growth on its top line. But we will also have Dr. Reddy's announced his earnings, and we have Darshan Mehta who's joining us to give us an idea. Darshan.
So it'll be important to see a one-off that will come in Dr. Reddy's, because they've sold Suboxone for close to 2 days there, and that probably will change the trajectory for Dr. Reddy. So 5% top line growth is something that we are anticipating. Profits, we are seeing growth of almost 3.5 times, given the fact that Suboxone will contribute and the base was rather low last time around. EBITDA, we are seeing up 90% and EBITDA margins of 17.5%, mainly on account of this drug that is there. Now, we don't know how much they have sold, but according to Endeavor's press release, Dr. Reddy's may have sold close to $25 million worth of of this drug in the 2 days before they were again forced to not sell this drug. Apart from, if you exclude this, the base business is expected to be weak. No major drugs were launched. The competition and price erosion continues in the existing product. So overall, that is weak. US markets continues to weak. Russia is showing no sign of improvement, and India market will be favorable on low base last time around. So that will aid Dr. Reddy's this time around. But it will be important to see how much from the entire numbers is the contribution that Suboxone is getting for Dr. Reddy's. But Shraddha, what can we expect from Yes Bank?
So it's expected, to be a very strong quarter for Yes Bank. Yet another strong quarter like we had seen in the March ended quarter. So in terms of net interest income, that is seen growing by about 28%. Net profit is seen 27% higher at 1224 crores. A small dip in the net interest margins of 5 to 10 basis points sequentially is expected on account of the change in the product mix, because this time around the share of the corporate financing book is expected to be slightly larger. But overall, fee income growth trends should continue at 30+%. Loan growth is expected to come in at about 40 to 50%, again led by refinancing opportunities in the corporate book, and of course given the lower base of the retail book, we should see a strong growth there as well. In terms of the asset quality and slippages, those numbers are expected to remain steady sequentially. So it will be overall important to see what the management has to say in terms of its retail asset and liability strategy, that is your retail book growth and your CASA numbers, also the sustenance of performance on asset quality and margins, and most importantly the capitalization levels, given the quick capital consumption that we are seeing on account of that 40-50% sort of a loan growth. So that's a strong number that's expected from Yes Bank. But what about Bharti Airtel?
So I'll start off with the headline numbers for Bharti Airtel. Now the revenue is expected to be higher by around 1.4% to close to 19,900 crore rupees, while EBITDA is expected to be down by close to 2.2% to 6,800 crore rupees. Margins are also expected to contract to 34%, while the company is expected to report a net loss of close to 277 crore rupees versus a net profit of 83 crore rupees reported by the company in the last quarter. Now, if the company reports a net loss, this will be the highest ever net loss reported by the company since listing, and it would be the first net loss reported by the company in the last 62 quarters. Now, ARPU, that is the average revenue per user, is expected to be down by around 7% to close to 108 rupees. This quarter is expected to be a mixed one for the operator, because the revenue is expected to grow while the EBITDA and the net profit are expected to remain weak. Now, revenue is expected to grow because of the strong subscriber addition that the company saw in the first quarter, and because of the Telenor merger that was completed during the quarter. Now, there are multiple reasons why the EBITDA and the net profit is expected to be weak for this company. Firstly, it is the first full quarter where the company will see the full impact of the rate cut of the international termination rates. Secondly, pricing action in the postpaid segment would have impacted the company. Thirdly, ARPU down trading because of the cheaper plans offered by the customers. Now, for Bharti Airtel, the margins are also expected to remain weak because of higher energy costs, higher network operational expenditures, and losses from Telenor consolidation. However, on the positive side, the company's African operations are expected to see a healthy trend, but led by continued growth in revenue and EBITDA front. Lastly, key things to watch out for would include the capital expenditure done by the company, their funding plans, their comfortable leverage ratio, and along with this, management commentary on further stake sale in Bharti Infratel and DTH business, their outlook for the Africa business, and any commentary on Jio's tariff and recent announcement would be keenly watched out for. We also have Maruti, which will be reporting its number today, and we have Darshan to give us all the details about the same.
Yeah, so it will be a strong quarter for Maruti. We're seeing a close to 28% top line growth that will come in. Profit will be up almost 47%, and the EBITDA growth we are seeing close to almost 47%. So EBITDA margins will be close to 15.3% versus 13.3% last time around. They've already given the sales number out, so you can calculate. So this time around, a growth of 24% in sales will drive revenues for the company. Realization growth will be there on the back of 3 to 4% price hike that they have taken, and margins will improve on the back of favorable mix and operating leverage. What do we need to watch out for? We need to watch out for the update on the demand scenario. What is the inventory? What is the discounting that is happening? We need more clarity on the partnership with Toyota, and finally update on any kind of royalty changes that has happened. So that's something that we're watching out for Maruti.
All right, you've just seen there's lots of earnings to look forward to today, and also today's expiry, so it's going to be a busy session. But there are several stories that you'll find if you log on to the website bloombergquint.com to check it out as of now. First up, in international news, here's an update on the election in Pakistan. According to a recent report, officials in Pakistan said the full result of the general election would be delayed. At that stage, Imran Khan's Pakistan Tehreek-e-Insaf was in the lead. The country is likely to head for a hung National Assembly. Meanwhile, the PMLN, another political party, has alleged the elections have been rigged and have rejected the result. In other news, the Information Technology Ministry wants WhatsApp to prioritize curbing fake news on its platform over its plans to launch a payment service, and that's according to a senior government official. It's going to be a busy day, and you'll find all of the action right here on Bloomberg Quint Live. Thanks so much for watching. This was all you need to know. Up next is Indian Open.